Okay, we're going to go ahead and get started. Welcome, everybody. My name is Ashley Boyle, and I am the Auction Relations Coordinator here at Sonoma County Vintners. I want to welcome you to our SCION webinar today on crop insurance with American AgCredit. Just a few housekeeping items before we get started. We will be recording the meeting today. And if you have any questions during the presentation, go ahead and drop them in the chat, and our speaker will try to answer them as we go, or we also have allotted some time at the end for some Q&A. So with that, I am going to pass it over to our amazing presenter, Shannon.
Thank you, Ashley. I'm going to go ahead and share my screen here. Today, we're going to talk about using crop insurance to mitigate risk. My name is Shannon Antonini. I am a customer risk management specialist with American AgCredit. Crop insurance agent is the simple term for that. I've been with American AgCredit for the past 9 years, but doing crop insurance on the North Coast for the past 22 years. American AgCredit serves all of agriculture. We are the leading provider of financing for insurance, treasury management, and our mission-driven programs. We are a cooperative, 5th largest association within the farm credit system. And we have a unique funding model that allows us to structure loans with terms designed to match your operation and cash flow needs. Here's a little snapshot of our footprint. As you can see, we cover from Kansas to Hawaii. So anything in the green is within our lending territory, within our footprint. And now on to crop insurance. Crop insurance is a government program for grapes in California. It is insurance by variety. So each variety is its own insurance unit and has its own coverage. There are optional units available for non-contiguous acres. So if you are farming Chardonnay in multiple locations that are not contiguous, then each of those vineyards could be its own insurance unit. A unique aspect of grape crop insurance is the contract pricing that's available. Most other crops you can only do contract pricing for organic crops, but with wine grapes, you can utilize that option for any variety or all varieties. Some qualifications with crop insurance: you have to insure all acres of a variety that you are growing within the county. So you can't pick and choose locations or certain blocks. You have to insure all of that variety. You can pick and choose varieties to insure. So you don't have to insure every variety that you grow, but you have to insure all acres of the variety that you're growing. Vines must be in their 4th growing season. So for 2022 coverage, that would be planted in 2019 or 3rd year after grafted, so grafted in 2020. And Uber vines are considered grafted vines that are planted. So those are insurable in their 3rd year after planting. So if you planted Uber vines in 2020, those would also be insurable for the 2022 crop year. If you can insure leased vineyards or crop shared vineyards, depending on what that structure is, depends on if it's 100% cash lease, you can insure 100% of the share. If it is a crop share and you're splitting that grape income and expenses, then we could split the coverage. So you could insure as the grower your percentage, and the owner could insure their percentage, or either one of you can insure all of it. A little bit complicated if you're in that situation. We can talk through who would be best to cover the coverage. As far as coverage levels go, coverage ranges from 50 to 85%, and that's of the average tons per acre that the vineyard is producing. So if the vineyard is averaging 5 tons to the acre and you select the 50% level of coverage, that would guarantee 2.5 tons per acre that would be covered by the insurance. Because crop insurance is a government program, the premiums are subsidized. So down in this chart on the bottom left, you can see those subsidy levels. At the 50% level, the premium is 67% subsidized. So you're only paying 33% of that true premium as the insured policyholder. As coverage levels increase, the subsidies do decrease. But if you look over at 75%, government's still paying 55% of that premium for you. So that does make it a very affordable option to manage your risk with. So as I mentioned before, the coverage is based on the average tons per acre that the vineyard is producing. It is a rolling average. So in the first year of insurance, we can kind of pick and choose how many years to report to establish that yield for you. It is a minimum of 4 years, maximum of 10 years. So with that rolling average, if we report a full 10 years, once we hit that 11th year, then the oldest year falls off as we bring the new harvest on. If it's a young vineyard and you don't have 4 years of history, or maybe it's recently purchased and in the sale you didn't receive 4 years of history, there are tools that we can use to come up with a 4-year average to base the coverage on. We can also ask for a determined yield request, and that is a request that goes to the government underwriter, to RMA, which is the risk management agency, and they'll set a yield based on information that we do provide. The minimum level of coverage is 50%. It goes up in 5% increments. Maximum level is 85%. There is a catastrophic level, which is a 50% level of coverage. In the event of a loss, you're only paid 55% of the crop insurance established price for that variety. We'll talk a little bit more about pricing in a minute. But at that catastrophic level, all acres of a variety are insured as one unit, even if they are not contiguous, and the cost is $655 for that coverage for all acres within the county. So it doesn't matter if it's 5 acres or 500 acres, the cost is $655. But remember, it is a really low level of coverage. The policy is a unit guarantee policy. So we look at the per acre guarantee, which is the percent that you elect of the actual production history. So that's that database that I talked about before, multiplied by the acres to come up with your unit guarantee. So here's some more about pricing. Great prices are released November 1st every year, and those are set by the RMA, Risk Management Agency. They do look at the crush report to establish these prices. Most of the time, it's a 5-year average that they're looking at, but depending on market conditions and what's going on, sometimes they will play with that a little bit. But for Crush District 3 for 2022, a few of the prices listed here. Chardonnay price, $2,318 a ton. Pinot Noir price, $3,698 a ton. Now the contract option allows you to increase that price based on your written contract. Contracts have to be submitted by May 15th, so we have plenty of time to get that added to your coverage for the 2022 crop. New in 2022, there's 2 things with contracts. The first one being you don't have to show all your fruit is sold under a written contract. What we can do is we can take the contract and the amount of fruit sold on that contract, that price, and then for any unsold fruit, we can use the crop insurance price, which is one of these listed, and do a weighted average. So I think we should see increase in participation in the contract option. I think that'll help some people get their coverage up. Also new for 2022 is that they've increased the maximum price allowed. So for Chardonnay, with a price of $23.18 a ton. What's 23.18 times? I didn't do the math ahead of time, and I'm not going to bore you with me playing with the calculator. Anyway, you can go 2.5 times that price now. So that also, especially for those areas within Sonoma County where, you know, you're getting a much higher, you've got fruit contracted for a much higher price than this, that would allow you to insure closer to your contracted price. Covered causes of loss for crop insurance. It covers any unavoidable loss of production or damage due to one of these, Mother Nature, basically. So any adverse weather, frost, wind, drought, heat, hail, rain are all covered. Birds and wildlife damage are covered. Pest and disease is covered. Really important with pest and disease, though, in your first year of insurance, you can't buy a policy and then turn around and pull it out in April and say, oh, I had red blotch and I need to pull the vineyard out and I bought insurance, so I want to get paid. Disease like that would only be covered in subsequent years and of coverage. And also, it's really important that if you're in that situation, if you do have a vineyard and you have crop insurance and you do have some disease out there, A, that you report it to your agent, and B, before you pull any vines out at all, we have to let the insurance company do an appraisal out there. If you pull a vineyard out and you have not notified your agent or the insurance company, they will deny the claim. Flat out, they will not pay it. So that's super important with disease. And then also smoke taint, which thankfully 2021, we seem to have skated by without too much of that, but 2017 through 2020, we saw an incredible number of smoke taint claims, especially 2020. There are some additional steps that need to be taken with a smoke taint claim. Testing has to be done. It has to be done in the field. There's a couple different requirements, but it is covered as long as it is due to wildfire. The only fire can be a little bit tricky if it is a situation where you've got a neighbor or someone's out mowing in the middle of summer on a hot day, you get a spark and you have fire that burns into your vineyard. That would not be covered by the crop insurance. That would be covered by that person's liability policy. But the fires that we've seen the last 5 years have all been covered. Some key dates and deadlines: January 31st is the last day to purchase a policy or make any policy or coverage level changes. May 15th is the contract due date. Timely reporting of damage is, I cannot ever stress enough. The policy states that you need to report damage within 72 hours of recognizing that damage. Losses can be reported anytime during the growing season. 15 days after harvest, or up until 15 days after harvest, is considered still timely notice of damage. If you are going to destroy the crop or divert it to another use, then that you would have to report damage prior to that. So again, that's with that disease. If you decide to pull the vineyard out, you need to report the damage prior to doing that. And then November 10th is the last day or the end of insurance for any crop year or when you harvest. So whichever comes earlier. If you're ever in a situation, you've got fruit still hanging out there on November 10th, we like to get an appraisal done, because if we had, you know, a crazy rainstorm November 15th and your fruit was still out there, the insurance company would need to be able to determine what percentage of the damage from that November 15th storm affected the crop. So again, another really important thing, if you've got fruit hanging on November 10th, you need to let your agent know so we can make sure and have an appraisal done. Late notices of damage can be reported. but the insurance company does have the option to deny a claim if you report 15 days after harvest up until 60 days after harvest. Once you hit that 60th day, the claim will automatically be denied, and there's no getting around that. And it's really important to note that 60 days is after the date of harvest of that variety on your policy, not your last day of harvest of all varieties. So if you have Sauv Blanc and you finished harvesting that on September 5th, and you have Cabernet and you didn't finish harvesting that until October 20th, for the Sauv Blanc, you need to have reported damage to your agent no later than November 4th, because November 5th is that 60th day, and that would automatically cause the claim to be denied. Again, my name's Shannon Antonini. Happy to take any questions. My contact information is here. Thank you for listening.
Awesome. Thank you so much, Shannon. Does anybody have any questions? Want to drop those in the chat so we can get those questions answered? I do have a question while people are kind of thinking it over. Can you just explain the difference between yield and revenue-based protection?
Yeah, so those are two very different policies, and with grape crop insurance in California, it is a production-based policy. It's a yield-based policy. It's not a revenue policy. Most of the revenue policies are for grain crops in the Midwest. There is available for grapes, and it's a totally separate policy, but a whole farm revenue protection policy. So that would be based on the revenue. It covers all of the revenue brought in for your operation and reported on Schedule S on your tax returns. So basically, we look at that Schedule S and do an average of that income, and that's in quick short terms, that's what you would be guaranteeing is the total revenue from your Schedule S.
Got it. Thank you. So we have a question in the chat. Can Catastrophic be added to my policy for $655?
So Catastrophic is a level of coverage just like a 50 up to 85%. It's not an endorsement to the policy. It's just a different level of coverage. So Catastrophic would cost you $655. There are no options available with Catastrophic. So like I mentioned before, if you have multiple locations, all acres would be insured as one insurance unit. And you also cannot select contract price for that Catastrophic level of coverage. It's really a very bare bones coverage, if you will.
Got it. Thank you. I also have another question. What would you say to a person who is on the fence on purchasing crop insurance for their grapes?
You know, after the last 5 years that we had with smoke taint, and even after 21, where we weren't dealing with smoke, but drought, and there was some late frost also that we saw, and we have seen yields are down this year. And I just think it's more important every year with the different, I don't want to go the climate change route, but weather patterns are different, and we can't always, you know, predict what's going to happen or protect against it. It surprises us sometimes too. So crop insurance definitely provides that peace of mind for you in these unpredictable times.
Thank you. Does anybody else?
And actually, one other thing, just quick to add to that, after 2020, everyone thought of this insurance as fire coverage. I mean, I've got people that call up and said, I want that fire insurance. It's multi-peril. It's covering all of those different types of losses. So even if what triggers you to look at the policy is one specific type of damage. Don't forget that it does cover all different types. And, I'm talking to people now after harvest and they're like, oh, my crop was down, but it wasn't because of a fire or anything. But that's okay. If there was drought, there was frost, there was all kinds of stuff that caused the crop to be down, and we're getting those paid as well.
That's great to know. You can't control Mother Nature, that's for sure. I do have another question. So what do I need to have or provide when requesting a quote?
So we actually have a fillable PDF that I can share with you, Ashley, and if you want to put that on a website or a link it somewhere, that'd be great. But basically we need the planting information. So, what variety, when was it planted, how many acres, and then production history. And again, minimum of 4 years, the maximum would be 10. So just whatever you can provide, we can work with and get that quote to you.
Great. We did have one question come in from James. Says, can you review again how the grape prices are set in event of a loss? Are those prices affected by contracted prices between the grower and the buyer?
So the prices are set in November each year by RMA, and they are based on crush district and variety. For 2022, they did a 5-year average. 21 harvest isn't part of that average because the crush report won't come out till February. So it's 2020, 19, 18, 17, and 16 that they've averaged. And then if you elect contract pricing and provide a copy of your contract prior to May 15th, then we can take into account your contracted price and actually guarantee that up to a maximum of 2.5 times that price that's already set.
Amazing.
There's also, I didn't talk about a quality adjustment, but there is a quality adjustment claim also where if, and we saw this with the smoked teen a lot, that maybe the winery decides, yeah, we'll still take this fruit, but we're only going to pay you $500 a ton for it or something like that. In that case, we actually take that price reduction and compare that to what the crop insurance price is. So if it's 50% less than the crop insurance price, we reduce your production to count by 50% and you're paid based on that. Again, a little bit of a complicated calculation, but we definitely see them. And even in non-smoke years, I've seen calculations or quality adjustment calculations in situations where Brix wasn't at that contracted price, but it's harvested and, in the contract, there's a reduction in price. So we can do that too.
Great. That's good to know. I am going to just leave it open for another minute just to see if anybody else has any other questions. We do have another question. So what are the average premiums on contract price election?
It's really hard to give an average premium because it is so specific based on the variety of fruit grapes you're growing, how many acres you have, the tons per acre that you're producing, and what that contracted price is. I'd be happy to do a quick quote for you with just a few of those items in order to give you an idea, but I can't really give an average premium. But you can feel free to contact me.
Another question. What if I miss the January 31st deadline?
If you miss January 31st, there is no coverage. We can't extend that at all. So that is a hard and fast deadline for coverage for 2022.
Okay.
And that also applies to existing policies. If you want to change a coverage level, maybe you're insured at 60% and you decide for 22 you want to bump up to 75, that also would have to be done by January 31st.
All righty. If we don't seem to have any more questions, I don't think we do. Well, thank you so much, Shannon. This was very enlightening. We really appreciate you being here. If anybody has any other questions, please reach out to Shannon. I'm sure she would be happy to assist you with any other crop insurance questions. So have a great rest of your day, everyone. Bye.
Thank you.